Hello everyone, I'm going to show you the audit planning and audit programming development of Fonterra Cooperative Group Limited. First of all, let's see the name, type, and what the company does. The full name of Fonterra is Fonterra Cooperative Group Limited. This is New Zealand's largest multinational dairy company owned by New Zealand farmers. The name Fonterra comes from Latin, meaning spring from the land. The type of organization is listed company, also public cooperative company. Fonterra was established in October 2001 by merge of two largest dairy companies, which is New Zealand Dairy Group and Kiwi Cooperative Dairies. Fonterra was listed on the New Zealand Stock Exchange in 2007. The main products of Fonterra are milk, butter, cheese, and cream. Next, I'll introduce why Fonterra needs to be audited. The first reason is legal obligations. According to the Financial Markets Conduct Act 2013, all the issuers required to be audited. Fonterra is a listed company. It classified as issuers, so they issue shares. Therefore, Fonterra needs to be audited. The second reason is the benefit of audit. There are three parts of advantage of audit. There are economic hypotheses, social accountability, political issues. For the economic part, audit could reduce agency theory problems, also provide insurance and management control to the company. For the social part, audit benefits to the stakeholders. For the political issues, audit could reduce cost of capital. The stakeholders of Fonterra are shareholders, government, as they pay tax to the government, and banker, because they borrow funds from bank, employees, as they provide job opportunities to the people, and suppliers and customer. Next, let's look at relevant major inherent risk and control risk. The definition of inherent risk is chance of misstatement if no internal controls prevented. The first major inherent risk is inventory valuation assertion risk. As Fonterra's inventory nature is dairy product, the shelf life is short and easy to get expired. As we can see on the Fonterra Financial Report 2019, the inventory balance is 2.9 billion New Zealand dollars, which is 17% of total assets. This means inventory is materially impacted by the expiry date. The second inherent risk is PPE valuation. The PPE amount is significantly material compared to the total assets. The inherent risk is high because the depreciation rate cannot be directly observed. The third inherent risk is borrowings. The borrowing current portion is 1.17 billion, which is higher than net operational cash flow 1.12 billion. The inherent risk is high because it might have a going concern issue to be considered. After inherent risk, let's talk about control risk. Control risk is the risk that the company's internal controls will not prevent or detect and correct misstatements. This means when internal control is effective, the control risk will be low. The first control risk of Fonterra is inventory. If the company no proper internal stocktake and expired product control performed at the year end, the risk will be high. The second control risk is when the company no proper intangible assets impairment review at the year end. The tangible assets risk will happen. The next control risk is when the depreciation rate is not reviewed and approved by the board properly and regularly. The PPE control risks will happen. This part is about audit implications of risk identified. As shown before, audit risk and deduction risk are related to the auditor, while inherent risk and control risk are independent of the auditor. They existed within the client, regardless of the audit. For example, if there is a higher level of deduction risk, then the auditor will require more persuasive evidence to ensure that there are no material misstatements. As we mentioned before, for the inherent risk, Inventory valuation assertion risk classified as high. PPE valuation risk classified as high. The borrowing risk is also high. For the control risk, the inventory risk we classified as low. The intangible assets is low. The PPE control risk is also low. The equation of risk of material misstatements is inherent risk multiply the control risk. Therefore, according to the table, the deduction risk is medium. This means that the control offset the high inherent risk. Therefore, we need to perform the medium level of audit work to address the risk of material misstatement. This part is talking about the audit programming development. The significant account that I choose is inventory. The inventory in 2019 is $2.9 billion, which is the second largest asset items and 17% of total assets. The inventory turnover days is 63 days in 2019 and 58 days in 2018. The inventory turnover days increased 5 days compared to 2019. This ratio shows the efficiency of the company's inventories management. It indicates how many days the firm on average needs to turn its inventory into sales. Based on the statistics, the product will easier to expire in 2019. Therefore, the inventory account is materially significant. As we talked before, Fonterra's internal control is effective. The control risk is low. Therefore, we choose test of control and standard substantive as audit procedures. The first part is test of control. This is observed internal stocktake and expired product assessment performed by the company. Another part is standard substantive. This performed analytical procedure on inventory obsolescence to obtain accuracy, valuation, allocation, and existence. The first specific procedure is test of control. Let's talk in detail. Step 1. Obtain client's internal stocktake instruction and expire product assessment policy of the company. Then, visit warehouse to ensure procedure performed by the company is in line with their policy. Next, obtain the inventory listing by warehouse and select inventory samples from inventory listing. Then reperform auditor independent the cycle count stocktake by agree auditor samples to actual inventory item in the warehouse. If no difference noted, we conclude client's internal stocktake control implement effectively. Finally, check if all inventory tag and damage handled properly. If no expired product noted, we conclude client's expired product assessment control is effective. The second procedure is substantive procedure. Step 1 is obtaining inventory listing with expiry date and total sales. Then check accounting policy showing how the company assess and write off expired product. Next, audit need to review the inventory listing with expiry date. Ensure if all expired items has been written off, and the management how to deal with the inventory items close to expiry date. Then calculate inventory provision and compare to the client. If material difference noted, communicate to the management and adjustment. The final step is data integrity testing. This should select samples from inventory listing and trace to supporting documents to verify the expiry date and accuracy. Overall conclusion: Fonterra's inherent risk is high, control risk is low, therefore detective risk is medium. The audit procedure to inventory is test of control and substantive test. Based on the work we performed, we conclude the valuation, accuracy, and allocation assertion of inventory is stated fairly and correctly. Thanks for watching.